It was a tough year, another tough year for ARK Invest and for ARK overall and Cathie Wood. Take a look year back and a look forward, because it sounds like it could potentially continue.
Right, Carol. Well, it's no surprise that the higher interest rate environment hurt ARK and Cathie Wood this year. Her fund is filled with those highly speculative technology stocks that don't like higher rates. But when we look at the earnings outlook for some of the top holdings in ARKK, the ARK Innovation ETF, her flagship fund, analysts have actually been cutting their forecast for these stocks since the beginning of December. They've trimmed their estimates for Zoom's earnings. Zoom is the top stock, but also Tesla, Roku, Shopify, and Teladoc. So some of the largest weightings in this fund, they don't look like they're going to be able to post great earnings next year. And we know that earnings really drive stock prices. So it might be another tough year for Cathie Wood.
What is funny is a lot of the companies that she has in the ARK Innovation ETF don't actually have any earnings yet. These are, as Romaine described them a little earlier, moonshot projects. Is there a bull case here, though, Emily, apart from, of course, 2020 redux, where the government doles out trillions of dollars and then drops interest rates to zero? What's the bull case here?
Well, the bull case for ARK is that there are still a lot of investors who seem to want a little slice of exposure, the ETF investors, to the theme of disruptive innovation. And so that has really created inflows throughout all of 2022. Even as the fund has continued to tumble, it's still been able to pull in positive inflows. We're looking at about $1.3 billion in net inflows for ARKK for 2022. So it might not be able to lift the fund into positive territory. Most of the investors that have started investing in the fund in the last 5 years are still sitting at a loss. But at least for ARK and for the ETF, there is still some investor support there to maybe allocate just a little bit of their portfolio to this super speculative part of the market.
And we've seen the net inflows, and we should point out there's been net inflows into the broader market as well this year, despite the downdraft, the pretty impressive ones to be sure. One issue that I think has been raised with regards to ARK and that whole empire was that when this first became popular, there's this family of ETFs, there really wasn't a whole lot of other places where you can get a sort of a basket of these quote-unquote moonshots, if you will. And the idea was that if you wanted to sort of ride this wave, then it was with Cathie Wood and her funds. But there have been a lot of other competitors who've come out to try to replicate what she has done, and as well as other vehicles out there that are either single stock trades or maybe not quite the broad basket that also offer investors a way to sort of play that. How much does that become a factor as to whether we see a rebound in ARK in and of itself?
You make a really good point. AllianceBernstein, they were one of the firms this year that launched a disruptive innovation fund. And there's a lot of active managers continuing to move into the ETF space. So I don't think we've seen the end of new fund launches of people trying to mimic that Cathie Wood style. I will say she really does have a pretty big fan following on Twitter. So that could provide a little bit of support for the fund itself. But if you look at the top 20 ETF issuers in the market, ARK used to be in the top 20 for total assets that the entire ETF firm holds. She fell out of the top 20 this year as other active managers have been growing more.